So now we're going to turn to a fireside chat without the fire with Andrea Bonomi, who is the CEO and founder. And Andrea and Emily, if you want to come on up to there's Emily, is the CEO and founder of Investindustrial. He is also a Stern alum, and he has been a private equity investor. Oh, got everything. He's been a private equity investor for more than 30 years. He's been a partner with the company, working with us at Stern, the Center for Sustainable Business, on Rosie with his portfolio of companies. And we'll talk a little more about that after Andrea and Emily's talk. And Emily and Andrea will talk about this, but really exciting news that the entire portfolio of Investindustrial is going to become carbon positive by the end of 2020. So really, really terrific to see that kind of leadership. I'd also like to introduce Emily Chasan, who is Sustainable Finance Editor at Bloomberg LP. She's been a long-time participant and interviewer for us here at our events, and really appreciate this. But also, for those of you who have not read the Bloomberg Sustainable Finance newsletter, it's one of the most popular and deservedly so. And she also was senior editor at Wall Street Journal, CFO Journal, and senior correspondent at Reuters. So with that, I'm going to turn it over to the two of you. So thank you again.
Great. Thank you, Tansi. Well, thank you. It's nice to meet you in person, Andrea. We've been talking about this for a few weeks and what it's like to be a carbon positive private equity investor. But let's start at the start and tell me a little bit about Investindustrial and your journey and how you started to incorporate sustainability in your journey.
Yeah, Investindustrial is a private equity investor. It invests in Europe and some investment in the US, about 10 billion of assets under management. And from the beginning, our mantra, our goal was to build better companies. So better companies at the beginning is making more money. Fundamentally, private equity tries to build endowments and pension funds and make a return. So at the beginning, there was nothing to do with sustainability.
So where'd your light bulb go off in the literal sense and figurative sense?
Well, it was about, we always had the view of building a better company, so sustainability slowly started creeping in, but from the consumer point of view, not from managers. There was no push from managers, and not from investors. It started, if you want, about 11 years ago, when we went to Copenhagen, to the first meeting, if you want, on trying to get some rules about sustainability. And that, it was for us a turning point. So it's been, 10 years that we've been carbon neutral.
So
as a firm.
10 years carbon neutral.
As a firm, not for the investee companies. We've been 5 years carbon neutral for our percentage in the investment, so we invest 10% in each fund. And from this year, we'll be carbon positive for all investee companies, which is unique in our industry.
Yeah, this is really interesting because it's a very pivotal year for people saying carbon positive, or Microsoft saying they're going to get rid of their historical emissions. Just everybody seems to be one-upping each other. Somebody's going to plant 1 trillion trees, right? Everybody's one-upping each other in this. But why now? Like, why can you be carbon positive now? And what exactly are you doing to achieve that?
Yeah, it's been a journey. It's not easy to. First, you have to measure what your damage, if you want, is. Your carbon footprint is the only thing you don't have to pay for. As a private equity investor, we pay for everything. We pay for waste, we pay for energy, we pay for everything else. Your carbon footprint, you just throw it up in the air. There's hardly any rules on it. And in our case, we produce relatively little carbon. We are. Our businesses produce about 37 tons per $1 million of sales. The best companies in the stock exchange in Europe produce 88 tons, and the overall stock exchange, I believe, is about 200 tons. But even our companies produce 750,000 tons of CO2 a year. So we throw up 750,000 tons. Or we produce 750 tons of CO2, and we never had to do anything about it. At one point, somebody is going to ask you to do something about it, even if you are not feeling that you have to deal with it. And that's why we started this journey. And it hasn't been easy. It's not easy to reduce your carbon footprint. It's not easy to neutralize it. And what you mentioned about neutralization is just the easy way of the equation. The difficult part is measuring it. The difficult part is reducing it. It's introducing it in the culture. And then, obviously, if you have the money, if you already become carbon neutral, that's fantastic. But you're just paying for it.
Yeah, well, you kind of have a unique leverage point as a private equity investor in this space that you guys sort of own the company and can even reduce their emissions, right? So that you don't have to pay as much when you try to offset it. But tell me a little bit about what you've been doing in terms of reduction, and then I want to talk about your strategy for paying for carbon positive.
Yeah. Well, so on the reduction side, first you have to have a team. So private equity is in a unique position on this because as you are a conglomerate and you have the size that you can afford to have a team on top of the companies, to work with the teams at the companies that you have. In most cases, you have to create them. They're not there when you invest. And that team, some of my colleagues are here with me today. They work with each company to reduce this footprint. And if you look at the shift from no policy, from staying within the law to no policy to reducing your carbon footprint, we're having immense successes because we're starting from low-hanging fruits. It's actually extraordinary how little procedures companies have. So we can have a huge effect by just having a team and a policy at our level.
What's the low-hanging fruit? Like where are you seeing the best tonnage reductions, I guess?
Well, the low-hanging fruits are everywhere. From buying from sustainable energy. So we have reached this year. Our target is 75% for the entire portfolio, and then it's 100% in another 6 years, I believe. 6 years. So there is a lot that can be done at the level of the investee companies. Very few companies, until recently, had any strategy on ESG. So we can make a hell of a difference by being early movers and changing the mentality.
Yeah, and I think it's interesting too, sort of the approach you guys have taken about how to become carbon positive. Because you say you're early here, and it pays to be an early mover in addressing this because it's probably going to get more expensive. So tell me a little bit about how you decided to offset your carbon. It's not the way a lot of companies are offsetting their carbon, so I'd love to hear that story.
Absolutely. So it became quite obvious early on that reducing your carbon footprint is a long journey. It's accelerating, but it's a long journey, and you still have a delta that you have of damage that you're doing to the world. And as a private equity investor, this delta is actually quite cheap. We're paid to have a perspective on things. So the ton of CO2 that we produce, or that anybody produces, has a damage to society of $150. There are various. It's not sure, obviously, what cancer, pollution, all sorts of illnesses that then we have to pay as taxpayers in another way. So $150 that you can actually offset much cheaper. So if you look at it from an investment point of view, if somebody asks you to pay $150, it would be better to actually become carbon neutral, invest in your companies, reducing your footprint, and then neutralizing it. In the last 5 years, there's been very little interest until this year. I mean, this year has obviously spiked up. Very little interest in carbon credits, in buying carbon credits, in creating carbon credits, etc. And carbon credits, effectively 5 years ago, have collapsed in value, and now they're creeping up. So, by being an early mover, again, you're just doing it as an investor. You're not doing it. You're doing it, because you are forward-looking person. You don't have to do it. You either believe in it, which is fantastic, but it's also interesting from an economic point of view. You can build carbon credits much cheaper than the damage you're doing, and this gap is not going to last. And once we move to the real cost of our carbon footprint, it will be very, very difficult And the companies that do not start early, reducing their carbon footprint, will not be able to afford it and will not be able to remain competitive. So we started our own program.
I guess that's quite the prophecy, that if you haven't already started, it might be getting too late. And I've heard investors kind of say that a little bit.
Well, if we produce 750,000 tons, if you are one of the larger US buyout funds, you have to buy most of Brazil, a little bit of Nicaragua, and plant trees in the desert just to get there. And it will cost a lot of money.
Yeah, it seems pretty expensive to plant trees in the desert.
No,
so,
exactly.
but no, we do need some more acreage, right? If we only have trees, and it is interesting to see all the carbon capture and storage technology broadly increasing. What are you guys doing exactly to offset carbon yourself?
Well, we're offsetting it at the source. So, for instance, we have a theme park, the second largest theme park in Europe, and we are just installing the largest private photovoltaic plant in Spain. It's the size of 14 football fields. So that will generate about 30 to 40% of our energy requirements. And we're working with every company to reduce it. That is the right way. So the right way is to measure it, reduce it, create better companies, not reduce your internal rate of return because of this, and actually enhance it because of this. There's a lot of people which think that investing in anything to do with sustainability would reduce your return, or you have to be an impact fund, etc. It's absolutely not true. You will reduce your return if you do not invest in sustainability. It's absolutely the opposite. Companies, and where you just mentioned where it all started, I was sitting next to another private equity house in Copenhagen, and he thought that the entire conference was baloney. And he said, we just bought a fantastic coal plant it was in Australia, I believe, and we are going to do nothing of the sort. People are going to move away from polluting industries. We're going to buy up polluting industries, and we're going to make a lot of money. That private equity firm is no longer in existence.
So it's a matter of survival. So I guess, well, we're here at Stern, and you guys have been working with this group about the return on sustainability investment. How do you think about that, versus a regular investment?
Yeah. You're talking about Rosie and we. It's the most difficult item. It's a last missing piece of the puzzle. Measuring your carbon footprint, fine, that can be done. Reducing it, it's also doable. It's very difficult to measure it, though, because, for instance, our companies are very dynamic. They buy other companies, they close plants, they open plants, they invest in new factories, and you can never see if your progress, what your progress really is. And you cannot show it to investors as a value you have created, because there's no standard measuring system. So it is, if it's the holy grail. Unfortunately, it's the result that then will cause everybody to actually have to invest to reduce their carbon footprint, because the moment you can measure it, I can make you pay for it, and that will explain what. So Rosie, I think it's what NYU is doing is the key missing piece for our industry and for our future.
Yeah, I mean, you think we'll ever reach that consistency in measurement point?
We're not very intelligent, so we can work PE. Some of us can work multiple of EBITDA, and that's about it. So it's not. We need to bring it to a simple measurement that is standard across industries, that you can measure your. But we have to. We have to. I think we will.
So it's interesting.
And I think NYU will. I mean, it's great that it is this university in New York that's having a go at it.
Yeah, it's interesting as investors, they always approach things from like a numbers perspective, and some of the stuff in sustainability is always a little bit hard to quantify. But it does impact your long-term returns, as you're saying. It does impact your survival. So when you first go to invest in a company, how do you think about sustainability?
Well, I mean, we've integrated into our investment criteria, and this is being more and more integrated by the people above us, which are the ultimate investors. So, it's the beauty about this is it starts, but in two strange positions: investors, private equity, which are usually the last people in the food chain. All the due diligence that investors do nowadays is to understand your ESG program. And so from the beginning, we have it. And from the beginning, we have the same answers from the companies. You arrive at the company, we used to measure only whether we have polluted the ground. That's been for 20 years the only environmental impact measurement that we used to do. And the chief executive of the company's answer was always, is always the same: I am within the law. The point is not to be within the law. The point is to turn your company into a modern company which is within where society is going. And that affects everybody from gas production to oil and gas to cars to whatever industry. So from the beginning we have it as part of our strategy, and if the ESG team does not sign off on the final investment recommendation, it does not get done. But we do not target companies because of the low footprint. We target companies from how much of an improvement we can do at the company level. That is what is important for society in general.
Yeah, it's interesting to think about it from a broader perspective, because there has been this big switch toward science-based targets and companies sort of working backwards and like what the planet needs, and that's not always completely in their control. So when you meet a manager of a company, you know, and they're not doing that, how do you respond?
Well, two things. He or she has to have targets in his company. So it doesn't matter. You arrive and you reduce it. You have to have a plan of improving your company's performance. If you don't have a goal in life to arrive at X, you just have to improve that company and to be the best in class. That is all we're asking. We're asking each company to do. So you have to be integrated in your decision-making process, and you have to have a target to be by far the best in your industry. If you can achieve that, that's a starting point.
It's a good starting point. And then I guess the other question I hear a lot from investors lately is about scaling solutions and scaling changes. And you know, when you implement one of the low-hanging fruit efficiency initiatives, you know, how to scale it and make it repeatable. Do you have an example of something where you're doing that in your portfolio? Yeah,
so we run conferences twice a year across all the companies, so that there is an exchange of best practices, and that works really well. It creates a community within the companies that moves very fast. It's a people's business. This is a cultural business at the company. Everything falls from that. The moment you change a culture, the moment the board of directors, the investors, the management team understands what it is to run a proper business, everything then trickles down from it, and it moves very fast, very fast.
Yeah. Just playing off that a little bit, I wonder what you think of this whole push toward stakeholder capitalism that people are talking about everywhere. And from your perspective, you know, it seems like you've really incorporated that. Do you think other companies are incorporating that as much? How much work is there to do to really have this as part of your investment strategy going forward?
I'm not sure I understood the push about the evolution of capitalism.
Stakeholder capitalism. Yeah,
stakeholder capitalism. Absolutely. So stakeholder capitalism is the result of this strategy. If you look at what capitalism or what a company stands on, it stands on the support of all the stakeholders and the results that come from it. You cannot have it in today's world. Any company that does not have the support of the overall stakeholders around the company. So stakeholder capitalism is just a byproduct of running a good company. It's not something that needs to come through regulation. I believe that we have an opportunity as investors, and I'm not talking private equity, I'm talking investors in general, to push and to lead the change, if you want, on of the way capitalism is evolving. And capitalism is evolving, and I'm sure it will evolve at a speed which is adequate to ensure its future.
Yeah, I guess it's interesting too to talk about capitalism broadly, and we were talking sort of how we started off talking about companies sort of one-upping each other and going to this carbon positive historical emissions thing. It's amazing to see that competition on that front that has not really existed before. But when you look at that space in carbon positive, where is it going in 5 years? Even if all your companies are carbon positive, is it going to be enough for the planet? And how do you see that developing?
Yeah, the upmanship that you're seeing, unfortunately, is a bit like the coronavirus. There's panic, and we're trying. People are trying to. If you're an airline, you're buying carbon credits wherever you can find them, and announcing I'm spending $2 billion and I'm carbon neutral, which is fantastic by all means. But it is the beginning of a journey. That the big announcements are great, and we should encourage them. But it is just one piece. Carbon neutrality will become the norm. It will be like being audited. I think it will not be as hot as a topic as it is today, because the world will change towards it. You're going to see in Europe regulations which are going to be massive, targets which are going to be very ambitious that we're going to achieve. So it's going to be the massive shift of resources, focus, culture in the next few years. And everybody's is worried about coronavirus. You don't see them, but the damage we're doing by not having had no carbon strategy is the number of people we're killing on a daily basis is substantially bigger than coronavirus. Forget coronavirus. Coronavirus is by the way, I'm Italian. I've been out of Italy for 2 months. Anybody wants to hug me? I'm selling tickets later. But but it will be. I mean, at least in Europe and the United States is slowly but coming along the same pattern. It's going to be I think the most amazing redeployment of resources in the right way that we've seen in a long time. Yeah.
Okay. Well, I think we might have time for a question from the audience. Is Tenzi? Yeah, if anybody has questions for Andrea, we have some over here. Is there a mic or? Great. Just waiting for a second. We need hold music.
There was amazing music at the,
right.
on the break.
Thank you. Go ahead.
I just wanted to clarify, when you're talking about being carbon neutral or carbon positive, are you talking about scope 1, scope 2, or scope 3 emissions?
That's a very good question. Scope 1 and 2, and we're working on scope 3. Absolutely.
Another question in the back there.
Well, I'll speak up. I'm the CEO of Urban Logistics Advisory Services. We're a global conglomerate, about 500 million in revenues, and our focus is in alternative energy, life sciences, and specialty process engineering. Is your impact investing, do you have a minimum enterprise value that you look at and maximum enterprise value that you look at?
We have, we do mid-market, from about 75 million enterprise value to $1.5 billion. So we do the full range. It's not impact investing. It's taking companies to the next stage. So turning, including ESG as a key plank of their strategy. But we do the entire mid-market.
Yeah, that's interesting about the mid-market also, because that's an interesting area, because we were saying there's been a lot of run-ups in the stock prices of sort of the pure ESG companies the past few weeks, and there are not a lot of private companies that have made the full route to going public. Do you, just as a follow-on to that question, do you see that changing in sort of these like ESG impact type businesses becoming more available to the general public?
Yes, and they're becoming much more valuable. More than ESG companies becoming more valuable is the let's call them non-ESG company, for lack of a better word, becoming less valuable. You cannot attract capital at a reasonable price. You cannot attract managers who want to work in a company which is doing something which is not considered by the stakeholders appropriate, and valuations are going down of those companies. So, impact investing is going to create a whole raft of new players. It will also not be as easy to have return on investment. It's becoming, you're competing also with there is technology, there is players which are not doing it only for a return. So it's not. I'm not sure the valuation that ESG-driven companies command is justified, but the industrial companies that do not have an ESG strategy, those don't have a future, in my view.
There, another question over there.
Hi, thanks. Can you talk about your ESG investments in the context of your average holding periods? In private equity, you're typically holding these companies 5 to 7 years before exit. So that may influence the type of investments you're making in sustainability.
That's an excellent question because of the timing ESG takes. So fundamentally, prior to a transaction, you've studied, you've thought about it, you started putting an ESG strategy in place. Then it takes about a year to 18 months for the company to organize itself. So it's not a 100-day plan. ESG is a much longer return, and it becomes effective in a much longer time frame. Then it takes about another year to measure, so about 2 years from the beginning, to have sensible measurements of scope 1, scope 2, scope 3 of the company, and having a team in place that starts making a positive impact. And then we have, unfortunately, only about 2 or 3 years to start implementing the plan. So we will never see the end of our work. And the question is whether companies will continue that work, because also at the same time we burden them with the cost, and we charge them the cost of what they do not offset. So all of a sudden it becomes a cost item. So if the next owner is a less scrupulous investor, that could be reverted. It's not very easy, but your question is absolutely right. In a private equity 5-year holding environment, you are not there yet to where you want to get the company. So in our case, we hold them slightly longer, so we hold them about 7 years, so we can start seeing the result of our work. But this is not a 100-day job. This is cultural and technology, cash flow, regulatory. There is a lot of stuff going around an ESG program. That's why we must have a team, they must have a team, and the CEO, he or she must be a believer.
Yeah, just a follow-up to that question, because I think you sort of sit in an interesting space as a private equity investor. When companies do set their targets, how do you hold them to account as the investor for actually reaching those targets, even if they're 2030 or making sure they're making progress on the way to 2050? How do you do that?
First, it's within the firm we know exactly the believers and not the believers. So the cavemen and the non-cavemen are pretty obvious when you look at the board of directors or the teams. And then we have a team. We have a goal ourselves that we have to achieve. So our team sets goals for their own carbon footprint, and they have to achieve it through the results of the companies underneath. So it's our team which sets those targets for each company, and I and the rest of my partners set the targets for them as an overall portfolio.
Is there another question in the back there?
Yes, thank you very much. Question for you about achieving carbon positive or carbon neutrality and then sustaining it. So have you begun to think about what the challenges will be to kind of maintain that momentum? I know you talked a little bit about, the organizations that will leave your portfolio, but eventually you'll get to the point where you will be required to sustain. And have you thought about what those challenges might be?
That's a fantastic question. The reason we have, that's a great question, because today you have the carbon positiveness is achieved through proprietary programs, in our case, which get us there, and projections of what we think the companies can do. And we have covered 10 years of this. So we know that for 10 years, assuming a certain set of results, we can do it. If you don't do it well and you make an announcement in 2 seconds, you can become carbon neutral personally. You can buy carbon credits and you measure your footprint on your car driving, or your house, whatever. And then if the costs become prohibitive, and the cost can become prohibitive, then you cannot maintain your promise. It was clearly a gimmick. So it is very, very difficult for a group. So in our case, we have 5 billion on the ground about. We're investing another 5 billion. We're assuming that the companies we buy are of a similar carbon footprint. We're assuming that the results, our target results, which is in some cases a reduction of 10% a year, is going to continue. And we have done proprietary programs that we can cover the next 10 years. The other way of doing it is you don't build a team. It took us 3 years, because planting trees or saving trees or doing blue carbon in Canada or trying blue carbon, because we're still doing research. Blue carbon is when my colleagues are better at this than I am. The carbon capture of estuaries is actually huge. Anyway, so doing it by yourself is the cheapest way of doing it. For a private equity investor, that's not normal. We're not used to planting trees. It's not our thing. So it's been very difficult to get here. And that will allow us to maintain our promise, our commitment. If you don't have that team and you are a single company and you're trying to build it, etc., you do run the risk that if you go to your customers and you say, I'm committed to be carbon neutral, the variability of carbon credits still already today are between $5 and $25 in the open market. Then there is various qualities of carbon credit. If you produce yourselves, obviously it's better, because you are helping also build this industry. But if that goes to $150, I'm not supposing it will go to $150, your promise becomes impossible to maintain. So you're absolutely right. You need to really think about it before you announce that you are carbon neutral, carbon positive, because that promise today may be doable with the fashion and everybody jumping into the freight. There aren't even enough carbon credits around the world to become carbon neutral. It just doesn't exist. So we have to create an entire industry for that.
Are there any promising areas that you're seeing in terms of like carbon capture that would work?
Well, I mean, the industry is now regaining the momentum to build carbon capture, and so both from a technological point of view, but from a reduction of carbon footprint, is going to be absolutely incredible. So you're going to see amazing results, I think, in evolution. Hopefully it will not be regulatory driven, but it will be that you will not buy a car which produces 2 times the carbon footprint on your neighbor, regardless whether it's legal or not. And the changes will be amazing.
Sorry, I was going to ask a bit of a follow-up on a prior question. You talked about exits, and you said, well, if you have an unscrupulous investor who comes and picks up your company, and they say, let's throw all that ESG out the window. Do you think about that when you're looking at exits and exit strategies for companies, and do you take that into consideration when you're looking to sell portfolio companies and what the next buyer will do?
Yes. Fortunately, he or she cannot be unscrupulous because the machines are in place. So the statements at the company level have been made. So the customer of the company is aware of the path that particular company is doing, and the entire strategy has been put in place. So it's very difficult, and it would be senseless usually to change that. And we get a lot of value for that. That kind of work translates into value. Carbon neutrality or a strategy in ESG is not a money-losing goal. It's apart from being the right thing to do, it is the right strategy for any company, wherever they are. So I think it's unstoppable.
Well, thank you. I think we have to wrap up, but I really enjoyed this conversation, and I thought we all learned a lot, so thanks for taking the time. Thanks, Emily. Here, I'll take this. And Andrea, will you stay with me for a minute? So, first of all, Emily, thank you so much, as always, for a terrific, interlocution. Is that how you say that? So I wanted to announce a really exciting partnership with Investindustrial, and Andrea will speak about it a little bit, but we're really pleased to say that Investindustrial is going to be investing and partnering with Stern Center for Sustainable Business around ROSI, providing us with $1 million over 5 years to do the work to help both their own companies with ROSI, but also to develop tools that can be useful for investors around the world. So I want to thank Andrea and Emmanuel and Serge and all the team of Investindustrial.
I think I said everything already before. ROSI is the missing piece, and we cannot develop it as a single institution. It has to come from a program such as yours. So we're looking forward to working with NYU to get to this incredible goal. Thank you.
Thank you, and thanks, Andrea. Terrific. So now we have, and we had this dilemma. This is, in sustainability, you often have dilemmas about which things are more important, what do you prioritize. So normally we would not have a lunch with packaging, but we decided in favor of packaging to give reduction of the opportunity for transmission of anything nasty. So we hope you will enjoy your box lunches, and please be back here with us around 5 minutes of 1 while we'll start the program again. Thank you again, and thanks for our great morning of speakers.